It's a don't rock the boat budget is what the popular verdict is on the Union Budget 2017. At the time of looming global uncertainty and shock to the economy post-demonetisation, Mr Jaitley has made an attempt to reassure global investors that India is still a bright spot in the world economy. Interestingly, although Mr Jaitley was very selective in offering the tax doles, but he did not overlook the needs of the infra sector, agri sector and the welfare of the farmers and the underprivileged. A quick glance at the fine print of the budget document reveals that there are several legislative changes which have been proposed to deny certain tax benefits to the industry and trade and also individual taxpayers. At first blush, the budget indeed has offered goodies to the real estate sector, giving a boost to the affordable housing in respect of infra sector status to affordable housing, extension of construction period of residential property for capital gain benefits from 3 years to 5 years, a reduction in the holding period for computing long-term capital gains from transfer of immovable property from 3 years to 2 years. The much-needed shifting of base year for calculation of long-term capital gain from April 1, 1981 to April 1, 2001. Under joint development agreement, liability to pay capital gain tax will now arise in the year of project completion and the profit-linked income tax deduction scheme.
If we can remove the bottlenecks, if we can kickstart, projects in India, then the consumption will start. It's super important. Affordable housing was a good one. The markets didn't react, they reacted quite well. And I think that came from the fact that he had taken MAT from 10 years to 15 years. He had capital gains tax to 2 years, from 3 to 2. So, he had a little bit for the corporate and for the industry to keep them happy, but they did a lot for for agriculture, and I think that's important. The agriculture minister once told me, if you put money in the farmer's pocket, everybody will benefit. So I'm hoping that will kickstart consumption.
However, the headwinds still remain strong.
What you said is true, because in the totality of the budget construct, about 18% of the total budgetary outlay has gone to the infrastructure sector. Right. And even compared to last year's budgetary allocations, it's a fairly steep jump. I mean, 3.67 lakh crores on a 21 lakh crore budget is as much or as good as the infrastructure could hope for. Clearly, all of this is public expenditure, which follows the government's stated objective of pushing the infrastructure sector with a major dose of public expenditure. So that strategy is playing out. And I think the real concern now is to get infrastructure, private investments going, for which I think we need more discussions on the concepts floated in the economic survey like PARA.
Right. So, sir, when you say these stressed assets, but there's nothing much has been done in terms of outlay for banks. It's merely an increase of 10,000 crore rupees, which is a minuscule amount. Don't you think there could have been a better figure in terms of recapitalization of the banks?
See, I think the major strike on NPAs and stressed assets has not found place in this budget. That is true. So, frankly, this 10,000 crore for PSU banks is neither here nor there. So, I completely agree with you.
Also, the recent economic survey shows that our country has been trying to solve its twin balance sheet problem: the over-leveraged companies and banks burdened with bad loans. The non-performing assets of the banking system, especially the public sector banks, are on the rise, while credit and investment are consistently falling. A centralized public sector asset rehabilitation agency or PARA is therefore required to make politically tough decisions to reduce the debts. Moreover, private-run asset reconstruction companies like ARCs have not been successful in resolving bad debts, which has led to the proposal for setting up PARA. Now, moving to the India Inc. Although no changes have been made on the MAT front, the period of carry forward of MAT or AMT credit is to be increased from 10 years to 15 years. Following this, the MAT credit available to the Indian company for carry forward would need to be reduced to the extent the foreign tax credit or FTC claim against MAT exceeds the FTC that would have been availed had it been subject to normal provisions. But what remains unclear, however, is what would happen if a company is subject to MAT because of losses under normal provisions. Moreover, due to the difficulties faced by small firms post-demonetisation, the move to slash income tax from 30% to 25% for turnover up to Rs 50 crore is likely to provide a big relief to the MSME sector. No changes have been made on the MAT front. Period of carry forward of MAT or AMT credit is to be increased from 10 years to 15 years. Rate of tax for MSME having turnover up to 50 crore has been reduced from 30% to 25%. Presumptive income tax for small traders to be taken as 6% of turnover, which was earlier 8%. Any expenditure in cash beyond Rs 10,000 is to be disallowed as business expenditure.
Tax benefits for the small and medium enterprises, because this will encourage, the small and medium enterprises is the backbone of our country. So this will encourage, with lower taxes, for more companies to invest and to come into the organized sector. That means it will increase the tax collection also.
With the digital push, such as not allowing cash transactions above Rs 3 lakhs, banks would get huge current account and savings account deposits, which would reduce the interest rates further. Also, with the financial discipline shown by the government, interest rates are likely to witness further lows. To promote digital transactions, presumptive income tax for small traders to be taken as 6% of turnover, which was earlier 8% when such income is received by digital or banking mode. Any expenditure in cash beyond Rs 10,000 to be disallowed as business expenditure. Good news for business entities opting for presumptive scheme as their audit limit stands enhanced from Rs 1 crore to Rs 2 crore. The body that was formed in the wake of the economic liberalization drive of the early 1990s is the FIPB, or the Foreign Investment Promotion Board. But since last few years, there has been a massive liberalization in the FDI policy, which has resulted in over 90% of the FDI coming through the automatic route. Therefore, FIPB is going to breathe its last in the year 2017-18. Although we wonder how the corporate lawyers in India would have received the news of abolishing a body like FIPB.
Time has now come to abolish the FIPB, because 90% of the foreign direct investment coming into the country is, as it is, coming through the automatic route. And therefore, in the course of the year, we'll be laying out the entire roadmap for the FIPB abolition itself. We intend listing several PSUs. It'll be make them, their functioning more transparent, they make them more competitive, and a lot of values would then be known when they get listed onto the stock exchange.
With the budget being done and dusted with, the industry's focus would now move towards the other big game changers in the form of GST on the tax front and Real Estate Regulatory Authority on the regulatory front. From a business perspective, the industry would now hope for a sharp fall in interest rates to kickstart demand on the residential side.